anybody who's listened to him, it's amazing to listen to him. Chris, former commissioner of the CFTC, and obviously a champion of private payment solutions, money solutions, I should rather say, than payment solutions. I think I'll pass over immediately to you to be as thought-provoking as you always are, and if we find a bit of time, I might have one or two questions for you at the end.
Thank you, Nicholas. Hello, ladies and gentlemen. I'm pleased to join you this afternoon by Zoom, and I'm grateful to Nicholas for the opportunity to participate. It's an honor to join distinguished former colleagues Jean-Paul Servet and Verena Ross, and to precede my CFTC successor, Caroline Pham. What I'd like to do in the next 15 minutes is issue a challenge and indeed a call to action to this audience. And that's to make sure that the future of digital finance is one that is worthy of free society and true to our finest and noblest human values of human liberty and freedom. I'm conscious that I'm speaking about liberty to a European audience, the originators of the Enlightenment, the intellectual movement that sought to improve society through fact-based reason and inquiry. And the Enlightenment shaped the way people understand issues such as liberty and equality and individual rights, including economic freedom. Well, today, we're well into new and profound societal changes, headlong into an information-based and digital networked world. In this new era, modern money is changing, and it's changing very rapidly. It's expanding from fungible cash bills and electronic notations on the balance sheets of central and commercial banks to unique digital notations on new digital infrastructure operated by global decentralized collectives, but also national sovereign governments and private sector entities. In short, you might say that the internet is now doing to finance, banking, and money what it's already done to information gathering, think Wikipedia, retail shopping, Amazon, entertainment with YouTube, and social networking with Facebook, Twitter, and TikTok, and photography, journalism, and so much more. And what is that? Well, it's increasing speed, efficiency, and automation, lowering costs, furthering inclusion, unlocking new business models, and displacing intermediaries and challenging traditional market structures. And this is happening all around us. Today, well over 100 foreign nations, representing over 95% of global GDP, are exploring various forms of central bank digital currency, or CBDC. A BIS survey suggests that by 2030, there could be 15 retail CBDCs intended for everyday transactions and 9 wholesale CBDCs used for transactions between financial institutions. At the same time, global stablecoin usage continues to increase dramatically. Stablecoins settled over 11 trillion in on-chain transactions in 2022, almost surpassing the payment volume of Visa and reaching 14% of the volume settled by ACH and 1% settled by Fedwire. The supply of stablecoins has grown from less than 3 billion 5 years ago to over 125 billion today. And of course, decentralized digital networks of value like Bitcoin and Ethereum continue to grow in notional value, computing power, and distributed ownership. Thus, whether or not any one country deploys central bank digital currencies, our fellow men and women will be dealing with CBDCs, stablecoins, and crypto in the century to come. That sometimes fashionable debate between CBDCs or stablecoins or crypto is a false choice. The future is all of the above. 4 years ago, at the World Economic Forum in Davos, we announced the launch of the Digital Dollar Project. The project operates a neutral, nonprofit forum to consider how best to modernize the US dollar, preserve its reserve currency status, and importantly, the values that we believe it represents in a coming world of decentralized and centralized digital currency networks. The project is meant to provide a safe space, if you will, where thoughtful consideration can take place away from the polarization of contemporary politics and social media, which is particularly acute in the United States. Over the past 4 years, our engagement with both the public and private sectors has delved into critical topics of CBDC privacy, risk, security, cross-border payments, and interoperability. 6 weeks ago, outside of Washington, the Digital Dollar Project co-hosted with the Atlantic Council a first-of-its-kind gathering of international policymakers, technologists, financial service providers, innovators, and consumer and privacy advocates from across the globe to explore the digitally networked future of money. Together, we looked at rapid changes in financial infrastructure and global payment systems, outlined areas for future public-private cooperation, and identified potential pathways to standards that embed key privacy protections, democratic values, and interoperability. I'm here to report to you that after those 3 days together at our conference, 2 conclusions were very clear. One, that digital currency networks, both sovereign and non-sovereign, and both centralized and decentralized, are coming, and they're coming very fast. And secondly, that the time for global standards, dare I say enlightened democratic standards, is now. The backdrop to the quickening advance of digital currency networks is an increasingly multipolar, complex, and fragmented globe riven by war, global conflict, and political and social division. The later 20th century financial system, dominated by multinational banks and the US dollar and Pax Americana, is gradually yielding to a 21st century worldwide kaleidoscope of overlapping and partially interoperable digital networks of value. Some are decentralized like Bitcoin, and others will be variously centralized and operated by global banks and big tech companies. And others will be deployed by national governments and even exported for sale as white label CBDC in a box for the developing world. And here's the danger in that future kaleidoscope. Those centralized digital currencies that emerge, both sovereign and non-sovereign, will be gathering points for massive amounts of data about the economic and financial activities of users, citizens, and voters. Many thoughtful people across the political spectrum and across the globe are appropriately concerned about misuse of such honeypots of private financial information. They're concerned about direct access by central governments, global banks, and big tech companies to such troves of personal financial data. They anticipate the political and commercial pressure on private sector actors to conduct surveillance, gather information, report on activity, and even disable financial transactions with disfavored groups and activities in a similar fashion to the now increasingly evident and deplorable censorship of speech on social media by both government and big tech firms. And that's why, regardless of the form of digital currency, sovereign or non-sovereign, it's imperative that free society thoughtfully consider privacy implications and insist that the future of money, the digital future of money, is consistent with key laws, norms, and values. Now, to be clear, the Digital Dollar Project does not call for ready deployment of a US central bank digital currency. We believe that the US should only consider issuing a CBDC once these key design elements, including for privacy, but also for security, resiliency, distribution, and economic stability, are properly understood and democratically addressed. But we do encourage the US to assert principled leadership in CBDC experimentation, both at home and digital currency standard setting abroad, that is consistent with civic norms and values. And we further believe that dollar-based stablecoins can play an important role in ensuring the future of the US dollar, provided we're able to get these values right. Designed correctly, a digital dollar, or indeed a digital euro, a digital pound, and any digital currency system, sovereign and non-sovereign, should run on systems that are operationally and objectively transparent, providing the public with independent assurance about technical function, security, and resistance to impermissible monitoring, data mining, and other exploitations. Citizens should not have to rely on a government or a stablecoin operator to say, trust us, we're not invading your privacy. Digital currency users should be able to see for themselves that they are not being surveilled. In fact, individual economic privacy and censorship resistance should be affirmative design features and competitive advantages of digital currencies that are worthy of free and open societies. But such a design approach will only work if governments are willing to embrace new digital technologies and regulatory approaches for satisfying legitimate national security and law enforcement objectives. These technologies include privacy enhancing, called PET technologies, such as zero knowledge proofs, homomorphic encryption, and multi-party computation that enable parties to prove that an encrypted proposition is true without revealing underlying private information. Combining these PET technologies with big data analysis, pattern recognition, and AI will allow law enforcement to protect privacy by identifying wrongdoing when it actually takes place, rather than invading people's privacy without cause in case it someday might. By encoding individual economic privacy into its very architecture, CBDCs and stablecoins should serve as desired instruments for people the world over who aspire to financial autonomy and inclusion consistent with basic human rights. As I close, I want to quote a friend and former regulatory counterpart, Mark Carney, the former governor of the Banks of England and Canada, who I'm sure some of this audience know. In remarks to the BIS in June of 21, Carney reminded fellow central bankers that the value of money requires not just the belief of the public at a point in time, but critically the consent of the public at all times. When it comes to money, the consent and trust of the public must be nurtured and continuously maintained. Mark Carney is right. And when it comes to digital money, obtaining such consent and trust of free people will depend on not just the value of the digital currency, but upon the values in the underlying digital architecture and design. And the most important of those values may be financial privacy, civil liberties, and the rule of law. Clearly, ordinary citizens have as much to gain from the digital networking of the world's financial systems as do governments. But they have a great deal to lose if digital currency diminishes their autonomy or their inherent worth as free citizens. Governments that deploy CBDCs or that support stablecoins linked to their national currency that do not adequately protect financial privacy will find such digital currencies rejected by their citizens to the benefit of digital currency systems that do. Yet those digital currency systems that drive network innovation while protecting financial privacy and lawful transactions will garner the enduring confidence of free people and those around the world who aspire to live free. The nations that foster such privacy-protecting digital currencies will win the economic power prize and the trust and consent of their citizenry. Ladies and gentlemen, it's increasingly clear that the future of money will be an array of overlapping and partially interoperable digital networks of value, some decentralized, others centralized, and operated by global banks and by big tech companies, and others deployed and even compelled for use by national governments. For many people, choices amongst those differing networks will be expressions of financial freedom or submission to financial control. But for all of us, the opportunity is at hand to drive global standards for digital value networks that are suitable for free people everywhere. I'll leave you with one final thought. 30 years ago, the first wave of the internet rolled across the globe. Then the United States, Europe, and other leading democratic nations, the heirs to the Age of Enlightenment, made sure that the Internet of Information reflected the values of open and free societies rather than closed and repressive ones. Today, the free world and free people must again work together to make sure that the coming Internet of Value reflects the values of financial freedom and economic liberty. So that's my plea to you this afternoon. Let's work together as our enlightened predecessors did to ensure that the future of digital currency networks is one that enhances the free world. Let's set standards for digital currencies, both sovereign and non-sovereign, that are worthy of human liberty and people everywhere who aspire to it. Let's not be intimidated by this innovation, but seize it to enhance the dignity of our fellow men and women and shape it in accordance with our finest and noblest human values. Thank you, everyone, and I look forward to Nicholas's questions.
Thank you very much indeed, Chris. And I should have said you were the chairman, not the commissioner. I have questions, but Caroline is waiting in the wings, and I might have to this time drop that idea because we're quite behind. So I apologize for that. But I think it is very important what you did, which is set out the whole debate, how the stablecoin discussion is linked to Western values. Because we have a debate in Europe at the moment around the digital euro where it's seen as undermining the values of the Western world and of Europe. And that's why I very much appreciated you being with us. And we will definitely have you back and we will discuss those questions offline. Thank you so much for being with us, Chris. Thank you so much.
Goodbye.